when we were chatting earlier, you labelled it Counter Trend Friday, where we had, for a brief moment, the JSE trading in positive territory. We're back in the red, and now it seems all those negative factors are still coming to bear on the local bourse. What kind of sense, if any, are you able to make of the activity we're seeing today?
Sure, it's been a very, very tough day for a lot of traders, I'm sure. As I said, Counter Trend Friday. This morning, the expectation was for the market to go down, based really on the US, the terrible initial jobless claims numbers that came out of there, the continued unrest in the Middle East, what happened, the earthquake that happened in Japan yesterday, also this morning, also adding to, uncertainty in the markets. And then it just all of a sudden shut up, went down 380 points this morning, and then shot up about 400 points. So it's trading down at the moment. So it's just so difficult to actually get a trend out of this market. It's so difficult to trade the upwards momentum in this market. So a lot of traders losing a lot of hair, I'm sure, this week.
Losing a lot of hair. How are they trying to keep sane? I mean, what is some of the commentary about in terms of strategies to employ in this kind of volatility?
I think it's been a tough quarter for a lot of people, and I think a lot of players are sitting on the sidelines on a wait and see game, or otherwise short in this market. It seems that the unrest will continue. There also is pressures from China coming out this morning, where the inflationary pressures are still high there. So there could be tightening that would obviously affect our markets and affect the global demand. So a lot of players looking at economic data, looking at political situations and uncertainties, and deciding rather to get out this market, to sell what they've got. Look, I mean, we're still at very high levels. The JSE is about, the top 40 is about 27,760, somewhere around about there. And, they're still very well built. They're still very high. Certainly not where at levels that we thought it was going to go to at the beginning of the year. So I think it's a strategy of just wait and see, stay at the sidelines, wait for futures close out next week to go by. Lots of big strikes at 27,000 and 28,000 on the top 40. So, wait and see what's going to happen there, and then thereafter, start a new quarter fresh.
Of course, you touched on Chinese data that filtered through this morning. We had economic data overnight out of the US that wasn't impressive either, that being jobless data. In the meantime, we're looking forward to retail sales numbers later this afternoon. What are your expectations on that front?
Yeah, I think the expectations is for retail sales to improve to 1%. I think they were 0.2% last time, and the expectation is for them to increase there. But it will be. It's a very, very unpredictable number. We don't know what will happen there. The US, it is their winter, so they've got the winter seasonality effect there going on. It is an economy that's still struggling to come back. So we don't know what that figure is going to bring about. As for the effect this afternoon, I think perhaps they'll be looking more to see what the European summit leaders, their first day of their two-day session, what kind of data or what kind of information will be coming out there, rather than looking more at the European side of the United States side of things. And also all eyes really still on the Middle East and Northern Africa.
Let's take it to Europe, where you had a tank slip there. I mean, we've got that Eurozone summit taking place today. Do you see it at all soothing market nerves on sovereign debt?
I think that's what the intention should be for the summit, to soothe some kind of woes or some kind of misunderstandings and fears around there. Yesterday the Bank of England did not raise rates as expected. So we want to see what the ECB will do. The expectation is that they will raise rates before the Fed in the United States does. So to see what kind of information they can give the market about that. The downgrades that happened in Spain yesterday and Greece earlier on. Those are kind of things still remind the market that regardless of what is happening politically around the world, we're still not in a position, or the European Union is still not in a position that is strong enough. So, it's those kind of things, and we'll see from the minutes that are brought out next week after they finish their meeting tomorrow, and you will take cue from that.
Of course, also taking a look at the implications it would have on the euro, where disappointment could heap further pressure on that single currency. Let's bring it back to some company news here in South Africa. Standard Bank Nedbank, saying that it sold Troika. Well, there's a proposed sale there, $372 million to buy that 36.4% stake that the company has in Troika Dialogue. What have you made of that move? It was pretty much expected, wasn't it?
Yeah, look, I mean, it was expected. In 2009 when they made that investment, I think, we thought it was a good portfolio investment. It had merits in terms of strategic alliances and, and deal flow. But they did not really get much critical mass out of it and did not necessarily have, a competitive advantage because of that deal. So I think it just confirms that they are really taking it seriously. They renewed move to focus more on South Africa and other African countries, their investments there, and to bolster that those investment and the money, hopefully that will come from this deal, will be used really to try and bolster their African presence and to build their stock, the company up in that direction.